Hello, welcome. This is the fourth and last video of this mini series of how to grant dividend growth stocks. Now, in my previous video, I looked at Healthcare Trust of America. In this video, I will look at Medical Properties Trust. Now, I need a company to buy and add to our portfolio in the cyclical asset class. So looking here at some real estate companies, especially some REITs. Now, it's not easy with the stock market being bullish over the last 5-6 years, so not easy to find cheap companies, or at least very good companies at discount. All right, so if we cannot find one, we simply do not buy or invest. All right, so let's score Medical Properties Trust and compare to HTA. Once again, we have our spreadsheet where we will score all the different data. So let's start with the company quality. The S&P rating for MPW, Medical Properties Trust, is BB+. Let's use this information. So BB+, and for BB+, we will score +1 because from BBB+ to BBB-, or vice versa, it fits in the row, yellow row, so we have a score of 1. Now we'll take a look at the MOAT. Does the company has competitive products? Now this is the only service that I do strongly recommend you to subscribe. Now according to Morningstar, there is non-economic MOAT. So none, and for none, we will score a 1. And regarding Petrovsky F-score, let's use Guru Focus for this information. MPW, Petrovsky F-score, we have a 4. So as a 4, now we will find in this row here. So from 3 to 4, yellow, we have a 2. So regarding company quality, Medical Properties, 36. Again, well below the 50% mark we are aiming for. Now we'll take a look at the dividend. Now we are going to use Guru Focus. And for dividend here on the right side, we have a 5.38%, which is high. 5.38% as dividend yield. And now let's compare this versus its history and versus the industry. So we use the color scheme. We have a yellow versus the industry. We have red versus its history. So yellow and red. So yellow, we score a 2, all right? And red, let me confirm, yes, red, we score 0. So the color for the score for red is 0. Now the 3-year dividend growth rate, let's find out. So for the 3-year dividend growth rate, 4.4%, 4.4%, and this versus the industry, we have orange, and versus the history, we have red. So orange versus the industry, we will score as a 1. And red versus the history, we will score as a 0. Right? Oops, my mistake here. Let me undo. So let's score this 0. Now, what has been the 5-year dividend growth rate? Again, Guru Focus. Guys, I'm speeding up a little bit things. You can check the previous videos where I go a little bit more in detail how to find this information. So the 5-year dividend growth rate is 4.3%, all right? So 4.3%. And here we will use the current dividend yield, which is a high yield, okay? So plus more than 4% with a 4.3% 5-year dividend growth rate. So it comes in this row. So between 2.2 and 5% per year in the high yield category, we will score this as a 2. Dividend payout ratio. Let's go back to Guru Focus, main page, and dividend payout ratio 0.38. So company paying 38% of its profits, which is okay, 0.38. And we have dark green and dark green. So dividend payout ratio for dark green, we score 4 and 4. Dividend yield on cost. So the dividend yield on cost over the past 5 years has been 6.62%. And how can we score this? So we have yellow and red. So yield on cost, yellow, we score this as a 2, and red, we score as a 0. So again, dividend yield on cost, red, 0, 0. And this company is paying dividends for consecutive dividends and increasing their dividends for the last 6 years. So it's a very recent company. So it comes in the range from 5 to 9 years. So we score as 1. And as concerning the dividend score, again below 50, we have 40. Now management, the return on capital invested. Let's go to Guru Focus, return of capital invested, 399.23. 39923. So we have yellow and dark green. So yellow, it's a 2, a dark green, it's a 4. All right, so we have here the dark green. Return of assets. So for return of assets, we will look here at this row, 10.56, dark green and dark green. 10.56 in dark green, so 4 and 4. Financial strength, we have 4.3 out of 10. We have yellow, okay? So 4.3, and we have yellow, so it comes here in this row as a 2. Current ratio, you can find this information here on the right side. So current ratio, sorry guys, current ratio, well, for this company, Guru Focus does not give us the information, so we will not have this information available. So let's go back to our spreadsheet. We score this as either way or a 0 or not available. In terms of profitability, we have 6 out of 10, all right? So we have a light green, 6, and light green, we score as a 4. We don't score this as a 5 because, sorry, as a 3, because as we can see here, Guru Focus help us to take out that doubt. So we will use in the case of a tie of score, the color of the bar. So we have light green. So the light green is a 4. All right. So even without the current ratio information available, we do have overall a good score for management, 61%. So above the 50 mark that we are aiming. Now let's take a look at products, 3-year total revenue growth rate. So 2110. So 2110, and I do think it was red. So red and orange. So red we score a 0, and for orange we score as a 1. Operation margin. So operation margin 68.68. And you can start to see that all these REIT companies, they are really overstretched in terms of valuation. So in terms of the operation margin, we have light green and light green. So a 3 and a 3. So I think I did score these incorrectly. So 3-year total revenue growth rate. It is correct. Yeah. Red and orange, light green, this is okay. And then for net margin, we have 129.20, dark green, dark green. So 129.20, dark green. Net margin, dark green, it's a 4. So 4 and a 4. And once again, in terms of product, 63% above the 50% margin. Last, relative valuation, price earnings. So the current PE is 7.12. So 7.12 versus the industry, we have dark green. So the company is cheap versus its peers and versus its history. So dark green, we have 5 and 5. Price sales, we have 9.35, and we have orange and orange. So we have a 3 and a 3. And price book 1.4, again orange and 1.4. Price book versus its history and its industry, we have orange, so we will score 2 and 2. And last, we'll take a look at the EV to EBITDA at 9.75. Regarding 5 light green, 4. So a 5 and 4. And now we already have our company checklist completed. So overall, the company scores above the 50% mark we are looking at. So the company is underperforming all the other metrics, all right? The dividend, it's not the best. It's far from that. But good management, good products, and the company is cheap. Now let's take a look at how cheap is this company, all right? And let's see what would be the fair value for the Medical Properties Trust. So the stock price, current stock price is, if you use here Guru Focus, $18.59. So $18.59. Let's take a look at the current price earnings. So the current PE is 7.12. So 7.12. And let's find out how is this company, how cheap or expensive it's this company versus its industry or against its sector, right? So you can see here that The medium PE for these companies is 16.62. Currently, MPW is cheaper than that with 7.12 PE of 7.12. So 16.62 represents, just a second guys, 16.62 represents a 50% discount compared to its peers. Now let's take a look at its historical price earnings. So the historical PE has been 19.98. You can see here 19.98. Currently is trading at 7.12. So it's cheap, but how cheap is it? So 1998, 60% cheap in terms of price earnings. Now we will see against its dividend. All right, so the current dividend yield is, let's use here, 5.38, which is okay, but historically the dividend yield over the past 10 years, the median has been 7.1. So the company is paying a little bit less than its average. So we can see here in terms of dividend, the company is 32% more expensive. Now, finally, we'll take a look at Morningstar fair value. And for Morningstar, medical properties trust is undervalued at 13% discount. So the latest close, 1859 for Morningstar, the fair value is $21.30. So 21.30. And we can see here that using this model where we look at the current price to earnings versus its history and versus the industry, plus the dividend, all right? So the current dividend versus the historic dividend and Morningstar valuation, we do have a discount of 76%. So currently the stock price is trading at 1816.59, sorry guys, and the fair value taking these metrics into account would be 33. So this gives us a huge discount of 76%, all right? So now we have the whole picture for MPW. 54% score, all right, at 76% discount. Now, if you guys remember in the previous video, we looked at HTA. So once again, a massive discount, 71%. However, the company does not meet the requirement of a relative score of 50 or better. So now if we have to choose between HTA, all right, scoring 48 with 71% and MPW scoring 76% discounted 54, I think there is no doubt. So this is a really cool and simple way to quantify data, right, that help us to have a better picture of the quality of the potential investment we are doing, all right? So here is a good example how to do it. So hope you enjoyed this mini series, and if you have any question, do visit us at thecorktrees.net. So take care.